To our talk of the tape, the record-setting rally and where it goes from here. Let's ask our panel. Strategic Research Partners, Chris Ferrone, BNY Wells, Alicia Levine, and CNBC contributor Requisite Capital's Bryn Talkington. It's good to have everybody. Chris, I mean, okay, S&P record high. Dow's going to get this 49K barring a shocker, as I said. You've liked the setup for a while here.
We have. We've talked about how this very cyclical pulse has been beating through market. And you really have seen it basically since mid-October, early November, where you saw the transport start to turn, all the banks started to break out again, the brokers. I think what you've seen with discretionary, again, taking the upper hand here in terms of a leadership sector, is very much on beat with this cyclical pulse. And frankly, you're seeing it in the rate market here as well. 10's pushing up against 420, but look globally. You've seen German yields break out, Aussie yields break out, Aussie dollar has firmed. So I think the macro is really confirming what the leadership is telling us as well.
You agree with that, Alicia?
We agree with it. We've been positive on the market really since April 9th, feeling that the low was in and that we had a risk-on environment here. And what we like here is the cyclicality, is the fact that financials are leading here. When financials are leading, you're not going into a downturn. So despite some of the issues that we talk about on the macro side, on the economic side, the market's actually confirming that there's a recovery going on globally. Maybe we had a soft patch in the last quarter or so, but we're actually moving forward and we're walking right into stimulus in the first and second quarter of 2026, both on the consumer and the corporate side. So we really like the setup here.
Still, you're not looking for returns that match even this prior years. So if the story is so good, why are the returns going to be less?
Because we think that the 493 are going to catch up. And in the end, you have such a heavy market weight in large cap tech that if there is some redistribution of capital, which I think we saw literally January 2nd, look what happened January 2nd and January 5th. You saw large cap tech sell off, and then you saw a rush into financials. And I think that's the trade this year. So it's just not the same kind of market cap to drive the top line index. But we do see a return of about 11 to 12% this year, and possibly higher if growth comes in better than expected, which I think is actually the upside risk here.
You just, Bryn, have to play it, I guess, a little bit differently than you have the past 3 years.
Yeah, I mean, I think we're seeing that as we opened the show with Dow 49,000, right? And so if you look at the Dow, those 30 names from a sector perspective, you have financials are 30%, and then healthcare and industrials are another 15%. And so it's like if you want diversification, we don't really talk about the Dow as an investment. You can buy the ETF DIA, to get that exposure outside of AI, outside of the NVIDIAs of the world, into the financials like Goldman, industrials like Caterpillar. And so I just think you're seeing broader participation. And we own RSP. I think there's lots of ways to play it in addition to RSP, like DIA with the Dow, of that breadth is going to spread out. As you guys just talked about, monetary and fiscal policy are in conjunction right now on top of higher than average tax refunds for the consumer. So a little bit for everything this year. And as long as rates, we have a steep yield curve, I think we're in good shape here.